Today, we're diving headfirst into one of the most heated debates in personal finance. The age-old question of whether you should buy your dream home or opt for the flexibility of renting. It's a decision that can have a massive impact on your financial future, and there are passionate arguments on both sides. But here's the thing. There's no one-size-fits-all answer. Your choice should be as unique as you are, taking into account your personal goals and financial situation. Get ready, because in today's video, we're going on a journey through the buy versus rent dilemma. Welcome to the Finance Virtuoso Channel, where we talk about all things finance. If you're seeking a daily dose of valuable information on money, business, investments, and savings, be sure to click the notification bell and hit the subscribe button now. Pros and cons of buying and renting. Alright, let's kick things off by weighing the pros and cons of buying your own home versus renting. Each option comes with its set of advantages and drawbacks, and understanding these is the first step in making an informed decision. Advantages of buying. Building equity. You're essentially investing in your future when you buy a home. With each mortgage payment, you're increasing your ownership stake in the property. Over time, this can lead to significant equity, which can be a valuable asset. Number 2. Stability and control. Owning your home provides stability. You have control over your living space and you can customize it to your heart's content. You're no more dealing with landlord restrictions. Potential for appreciation. Real estate historically tends to appreciate over time. This means your home's value may increase, potentially leading to a profitable sale down the road. Drawbacks of buying. High initial costs. Buying a home comes with hefty upfront costs, including a down payment, closing costs, and potential maintenance expenses. It can be a significant financial commitment. Responsibility for repairs. As a homeowner, you're on the hook for maintenance and repairs. A leaky roof or a broken furnace? That's your responsibility. Number 3. Less flexibility. Home ownership can tie you down. If you're someone who loves to move around or your life circumstances change frequently, buying might limit your flexibility. Advantages of renting. Lower initial costs. Renting typically requires a smaller upfront investment. You might need a security deposit in the first month's rent, making it more accessible for some. Less responsibility. Say goodbye to those DIY repair projects. When you rent, your landlord is usually responsible for maintenance and repairs. Flexibility. Renting offers you the freedom to explore different neighborhoods, cities, or even countries without the hassle of selling a property. It's perfect for those with ever-changing lifestyles. Drawbacks of renting. No equity building. The money you pay in rent doesn't contribute to building equity. It's essentially gone once you've paid it. Limited control. As a tenant, you may have restrictions on how you can personalize your space. You're living by someone else's rules. Rising rents. Rent prices can increase over time due to inflation or market conditions, potentially making it more expensive in the long run. Now, it's time to delve into the financial nitty-gritty and break down the key factors that could sway your decision. First, let's talk about those initial expenses. When you buy a home, you'll typically face a substantial down payment, closing costs, and possibly immediate repair or renovation costs. For instance, the median home price in the United States is around $348,100. A 20% down payment alone could set you back $69,600. Add in closing costs and you might be looking at a total of around $81,900. Compare this to renting, where the upfront costs are often limited to a security deposit and perhaps some moving expenses. It's a much lighter financial burden initially. Now, let's consider the ongoing expenses. When you own a home, your mortgage payments remains relatively stable, assuming a fixed rate mortgage. Over time, this can be an advantage as rents tend to rise with inflation. For instance, Meg buys a $236,000 home with a 20% down payment, while Matt rents a place for $1,700 a month. Over 30 years, assuming 3% annual inflation, Matt's rent climbs to $4,000 a month, while Meg's mortgage stays at $950. In the long run, Meg might come out ahead, especially when she's mortgage-free and can invest her savings. But remember, this scenario depends on various factors like income, home appreciation, and investment performance. Lastly, don't forget about those hidden costs. Owning a home includes property taxes, homeowner's insurance, maintenance, and utilities, on top of your mortgage. Harry and Heather's $200,000 home cost them around $2,050 a month in total housing expenses, including taxes, insurance, and maintenance. These costs can vary, but they're part of the home ownership package. Renters like Ryan and Rosie might pay less in monthly housing expenses, but they also don't build equity. It's essential to consider these hidden costs when making your choice. Now, it's time to get real about some practical aspects that often get overlooked but can greatly influence your decision. Let's start with an eye-opening statistic. The average American stays in their home for about 13 years. This figure varies depending on factors like whether you're a first-time homeowner or have owned before. First-time homeowners tend to stay a little less, while those with previous home ownership experience stay a bit longer. But on average, it's around 13 years. Now, think about your own situation. How likely is it that you'll stay in the same home for over 30 years? Life has a way of throwing curveballs, like job changes or lifestyle shifts. Job changes can be a major factor. Some careers require frequent relocations or may lead you to new cities and opportunities. Lifestyle changes, like starting a family or downsizing once the kids leave the nest, can also prompt a move. So while owning a home can offer stability, it might not always align with your life's twists and turns. Another essential factor is that real estate is hyper-local. What works in one city or neighborhood might not apply elsewhere. Your chosen location can greatly impact your investment. Housing markets can appreciate at different rates, and expenses can vary significantly. Before making a decision, research the real estate trends in your specific area. What holds true in one place may not in another. Now that we've discussed the financial and practical aspects of the buy versus rent decision, it's time to focus on your personal preferences and, most importantly, your happiness. Your home is more than just a roof over your head. It's where you build memories and find comfort. Consider your personal preferences and what truly makes you happy. Do you value the freedom to move frequently, explore new places, and embrace change? Then renting might align better with your adventurous spirit. On the other hand, if you crave stability, the ability to customize your space, and a long-term connection to a community home ownership might bring you more joy. Emotional attachment also plays a significant role. A sense of ownership often fosters a deeper connection to your home, making it a place of comfort and security. Many homeowners take pride in maintaining their properties, which can lead to a sense of accomplishment and contentment. But remember, this feeling isn't guaranteed, and renters can also create strong emotional ties to their spaces. It's about what feels right for you. Another vital aspect is the balance between flexibility and commitment. Renting offers the flexibility to adapt to changing circumstances quickly. If your life is marked with uncertainty or frequent changes, renting can provide the freedom to move without the hassle of selling a property. On the flip side, home ownership signifies a significant commitment. It's a long-term investment that requires planning and stability. Tips for making the decision. We've covered a lot in our journey through the buy versus rent debate. Now, it's time to equip you with some valuable tips and considerations to help you make that all-important decision. Number 1. Assess your goals. Start by defining your short-term and long-term goals. Are you looking for stability, an investment opportunity, or the freedom to explore new horizons? Knowing your goals is the foundation. Number 2, create a budget. Next, establish a clear budget. Calculate your monthly expenses, including housing costs, and compare them to your income. This will reveal what you can comfortably afford. Number 3, research the market. Whether you're buying or renting, research your local real estate market. Understand trends in property values, rent prices, and neighborhood dynamics. Number 4, think about your lifestyle. Consider your lifestyle preferences. Are you a free spirit who values mobility, or do you long for a stable, personalized space? Your lifestyle should align with your housing choice. Number 5, consult experts. Don't hesitate to seek advice from real estate professionals. Realtors, financial advisors, and mortgage brokers can provide valuable insights tailored to your situation. Number 6, future-proof your decision. Lastly, think long-term. Your decision today should fit your future plans, whether it's career growth, family expansion, or retirement. Thank you for joining us on this journey. We hope these insights and tips will guide you toward your dream home, whether it's keys to your own kingdom or a cozy rental haven. Remember, this is a significant decision and there's no rush. Take your time, weigh your options, and choose the path that feels right for you. And as always, your comments and experiences are welcome below. Don't forget to like and share this video with your financially virtuous friends. Until next time, and may your path lead you to the perfect place you'll proudly call home.